Good evening, Nick Inman here from VolumeProfileTrader.com on Monday, April 23rd. Looking at the S&P, kind of got the follow through that I was looking for from the weekend update, saying my bias is to the downside. Now we're seeing a little bit downside pressure to the market, which isn't a bad thing because eventually it's going to lead to a good buying opportunity for those who are buyers, and it'll basically shake out the weak hands in the market if this market chooses to go higher throughout the rest of 2012. So let the market do what it's going to do and realize that, there may not be much to do for you right now from a buying standpoint, but you should have plenty of cash waiting for the opportunity, waiting for the bounce to take advantage of that and to capitalize and add on to the gains that you've already seen for 2012. So looking at the S&P close up, just at this current technical picture, and these levels down 1352 to 1356 or so ended up being support, which was on the 10th. It was that lower end of the range. Market closed right at 1356.75 or so that day. The S&P futures did, and then from there we had a bounce. So you have to consider that level, and I'm going to mark it off here. You have to consider that level important, and you can see so far we have a buying tail off that level. Now going into what is overhead resistance, you have a few levels to look at. The most obvious is the top end of this current range, and what I'm going to do, similar situation, take the wicks that we've seen, and when I mean wicks, I mean these tails from the candles, and I'm going to take and basically border or bracket those wicks from what we've seen over the course of the range, and you can see just based off of that, we've had since the 10th we had some higher lows, which ended up, if you drew wicks there, ended up being good support. Then we pushed up to the top end, developed a pretty big resistance at what was support, and now we're pushing back to the downside. So let me get rid of those lines again because I don't really consider them valid. So what we need to figure out is where is, in the middle end of the range, or the middle of the range, where is resistance? Why is this, where should we look for selling pressure is what I'm trying to say. And I think that you can take the Globex high from today, from Monday, 1375, and I think you can consider that your line in the sand right now. If we push up above that level, we'll probably go and test at least the mid 1380s, and probably most likely the top end of the range. If we stay below that, then we'll probably have a likelihood of going back to test this 1338, 1340 level, point of control for the year, point of control from February. So I wouldn't be surprised to see that at some point in time. Remember, Fed has a 2-day meeting starting tomorrow. Apple has earnings tomorrow, so they're definitely, and there's plenty of other market movers throughout the week as far as earnings are concerned. So let's look at the NASDAQ. And this made a new low relative, let me get rid of these lines, relative to the S&P. So that's something to be aware of. Now, if you remember, and I'll have to pull up the chart, I talked about support at, we have some potential support coming up on the NASDAQ. Nope, not like that. Okay, you have point of control for the month of March. Right here, guess where we're bouncing? Right at the point of control for March. Is that worth watching? Yes, this could be a trade. This could be what you're looking for as far as from, a potential market bounce. So you're looking at these current lows, You define your risk by putting your stop under the current lows, and you'd be looking for a bounce up towards 2,700. It's a 2% bounce, so it's nothing great, but it's, a potential nonetheless. And if you were really wanting to trade this bounce, you would look at somewhere in the weeklies as far as options concerned, and you would look at currently trading at 65. You would be looking at the 65 by 66 call spread, and depending on what they're trading for. Okay, currently trading for 45 to 48 cents. I'm sure tomorrow it's probably going to be, it may be around that level. The lower 40s, if you could get that, the better, because your risk reward is in your favor. But I do like the potential for that trade, probably a trade that I'll put on tomorrow. But you have to think Apple earnings. You have to define your risks somehow, and obviously Apple's going to move the market. Now, with that said, Apple continues to trade down, being from 644 down to as low as got as low as 556 and closed around 571. So this is a stock. If you just take out the last number, it's gone from $64.40 as low as $55.60, and now we're at $57. So it's been whipped around quite a bit, as you all know, and maybe this selling pressure, I'm not trying to predict, but it may be setting up for some type of bounce. So if I'd be looking at it from the standpoint of the Qs, I would still be interested in the 65 by 66 call spread. Now, with that said, there is the risk of Apple throwing off that, and maybe it's something that doesn't fit your risk parameter. Okay, so Netflix, looking at the $100 level, earnings come out, and it gets crushed, trading right now $85 or so. I'd like to say that tomorrow you'll have an opportunity to get a quick trade on this, and I would be looking at the weekly 85 by 90 call spread. It will probably be, obviously, if you look at it after hours right now, it won't be accurate, but it may be a good trade, because you'll probably see a bounce shorts covering, especially if they've been pressing this since the mid-20s, high teens, and all the way down to 85 now. That's a good trade, and they're probably going to look to cover it. So just be aware of that, and look for a quick trade to the upside, and then get out. Seattle Genetics, this was a name that I bought today. Bought a small position, realizing my stop has to go right below 18, so I didn't do anything too crazy. But I like the way it traded, especially towards the end of the day. I should say around average volume. So that's, nothing to be too concerned with. But you're holding the top end of what was resistance. Now you're holding it as support. So one thing you could do is you could place your stop, back half your stop back in the range, say below 1875, and the other half below 18. That helps you manage some risk more, but you run the risk of being stopped out on that 1875 position just from random noise. But remember, this is a name that I think it's 29 days to cover, short interest or something like that. Earnings are the 26th of April, so be aware of that too. ConocoPhillips, after this, basically consolidation and a breakdown, we're at the point of control for the year. We're at the 150-day moving average. We're at the 200-day moving average. Earnings came out today before the bell, and let's see, their earnings were $2.27 per share on estimates of $2.07. So, overall the market's going to whip around, but you look at this as a potential opportunity to get in. We've basically had a, cutting this move that we've seen from 60, let's call it 68 to 78, cutting it in we've retraced 2/3 of that move, giving you a potential opportunity in ConocoPhillips. I still like this name, so I'm okay holding it. One of the things I like to do is sell covered calls against it. Alright, this is a new name. ABOMed, I don't know, ABMD, we'll just call it that. It was up nearly 4% today, so I'm not recommending going out and buying a ton. But if you want an opportunity, you can have your stop below these recent lows, around 2015 or so would be your stop. So you have nearly a $2 stop right now. So what you'd be looking for is some type of weakness, more in the mid 21s, and you would be looking to scale into this. This is a high earnings, high growth rate type of name, and you have about 1 month till earnings, so you don't have any risk right now with that, and it could give you a good opportunity to trade up towards 24, 25. Just try to get it in the mid 20s rather than right here up 4%. But up 4% on down tape is impressive. Okay, natural gas. Okay, this may be ridiculous, and I understand that, but I think that you can take a shot at natural gas to the upside, and I wouldn't necessarily recommend it as far as piling in, but for a speculative position, maybe you have a short covering rally here. We've seen a push below psychological level, $2, and now we're back above it. So if we can stay above it, this could pop to the upside and pop, 10% or so, which could be good for a couple of names. That could present an opportunity for you to profit. So let me first show you what's going on a monthly scale, and you can see we're pressing above April's point of control. We have a little bit of potential resistance here at this 202 level or so. You can see it was a swing high before we made new lows. But we also, looking at this $1.97 to $2, let's call it $2 even, that could lead to this entire level below it being, rejection, and where the sellers are stuck, they're forced to cover. What happens when they cover? Well, they have to buy, and could push natural gas higher. That in a sense, $2. Every once in a while you get these moves where you get big down moves, and then it balances out, gives you a push to the upside. I think this is one of those opportunities. And if you look names, I'm looking at Chesapeake Energy, and the reason why is because we've had this big flush on nearly 100 million shares on, the 18th, and since then we've stabilized. We made a new low today, but we definitely closed in the upper end of the range. So what I'd be looking at is where these recent highs were, $18.32. You set an alert, say at $18.35, and you watch it. If Chesapeake closes above that level, you look to get long Chesapeake, and you play it for a bounce up to $20, and that's where you take your profits. So I'd be looking at doing some type of call spread, maybe the 18/20 call spread, and then once it gets up towards 20, yank that off and realize that the overall trend is, definitely down. But you're playing a counter trend move with the speculation that, there could be some short covering in natural gas, which, would help the case that not only the short sellers on Chesapeake to cover their position, just because, generally speaking, natural gas and Chesapeake they have a similar chart in terms of if you overlay them. you have similar moves where if Chesapeake, or I should say if natural gas rallies, Chesapeake will get a pop too. That's not always the case, but it's setting up for something like that. So just be aware of it. Also, just bringing up this 15-minute chart, you have point of control at 1807. So, like I said, a close above 1830 or so would be the catalyst, or what could juice this stock for another at least $2 or so on the upside, and potentially more. And obviously, this could potentially be a bottom on Chesapeake, given the fact that we've on what was it, the 18th? Sorry, nearly 100 million shares. So pretty impressive. All right, the dollar was strong today, got sold into. Just watch this, and the Fed minutes, or the Fed meeting, I should say, over the next 2 days should be the tell-all of where the dollar wants to go. I can't do two slashes. There we go. The euro got beat up a little bit today, just like the dollar rallied a bit. So one thing is we're still in this range where the upside is around 132.20 or so ish, and then the downside, we have a lot of buying tails here, and you could go as far as the downside starts at 130.75 or so, with potential downside of around 130.36 when we've had one trade below that, but that closed on the highs of the day, so I would really ignore that. And then you could look at this most recent tail, 131.08. Is that what the 131.07? That's the low, and that's kind of your risk right there, and you trade accordingly. We could be potentially making a lower high, so that's just something to be aware of. Australian dollar, I just want to point this out, pretty weak today. We have some resistance clearly at this 132 level or so, all the way up to, well, we'll focus on around 135. We have some resistance there, and then we have some support around this 102.60 level down to about 102.35, with some support around, or I should say, kind of like a final stand around 102.10. So, once again, that's, a lot of people trade this. That's kind of your parameters, so that's the way I see it. And you kind of look for a move one way or the other, just kind of setting out your levels, so when the market gets a little more volatile and moves around this week, you're prepared and you know what's going on. Alright, gold, a pretty good day today relative to the rest of the metals, in my opinion. You've had what has been pretty good support between around, 1631 and 1638 or so. We got up to those levels today. Right now we're trading within that level. We have continuing lower highs, and that's something to be aware of. But we spiked down today back to this 3-day range. It was rejected, and we traded back up to the top end of this current range. So what you'd be looking for the Fed meeting, do we slam below these levels and really test, the low 1600s, or do we recover? Is this 1630 to 1640 range or so support, and we go back up towards 1660 to 1670. So we'll have to wait and see for tomorrow and Wednesday. Silver got beat up today. Talked about over the weekend. Let me get rid of these. Talked about over the weekend how you're going to have an opportunity one way or the other. We kind of got that today. So I'm sure a lot of people are looking to sell silver into strength, and I don't think that's a bad idea. I think it could work if you're looking for a trade. I'd be looking at perhaps I'm pretty sure these are trading 50-cent increments now. Okay, so as far as a potential trade, I have the silver futures up. We have two circumstances. One is, let me see if I can get the right zoom on it. All right, we have what should be support around the 130 level. I'm sorry, $30 level on silver, and that was the point of control for January. So we're getting close to those levels, but if we get any strength into the next day or so, it could be an opportunity to sell. So right above 31 or so, you would look to SLV, and we'll take a similar move. So around, say 30, just above, say 1% above 30 or so on SLV, you'd be looking at the perhaps 30.50, so $30.50 by $29.50, or maybe $29 call spread. I'm sorry, not a call spread, a put spread. So I just pulled it up, 30.5 by 29, trading for 60, let's call it 65 cents, expiring in 25 days. So this thing, essentially, SLV has to get down, 28, or no, 29. It has to be down by 29 at some point by this red vertical line. So what you'd be looking for is a small rally around to this the bottom of this high volume area. You buy the put spread into that, the 30 half by 29. Maybe you could do the 30 half by 29 half. It does, whatever fits your parameters. As long as you're getting more than a 1-to-1 risk reward, then you should be okay. And realize that, with time, this spread is going to become less valuable, so you can put it on for cheaper. But realize that this will have to move. If you're afraid that it can't move fast enough in 25 days, then the Junes are trading 53 days till expiration, and perhaps you can go a little further down as far as a strike. But overall, this is just setting you up for what the trend's currently doing. You're trying to sell into strength and look for a potential continuation to the down move. Now, if silver recaptures this 31 level or so, then I would say the trade's off, and you just have to manage your risk accordingly. Alright, copper futures, just want to say they're stabilizing, they're holding in there, but they're still weak, and we've failed after basically making a round top. We're at the 150 day. We have a little bit of volume here, but this isn't something that you'd want to look to trade, in my opinion. So people who are focused on Freeport, I think the trade for now is to sell into any type of strength, unless if you get above 40. If you get above 40, then you probably have an opportunity to get to the mid to high 40s, and but from there I do think it could be a sell on strength type of strategy. And the last thing I want to cover is XLF. XLF got down to that $15 level that I've talked about for a while. $15 to $14.60. That should be some type of support, and we got a bounce today. We barely made a new low relative to the 10th, but we did. We closed higher though. We closed above 15, so that's positive. There were really no bank names that really intrigued me though. Bank of America at the point of control, but this is really not something that intrigues me. Wells Fargo actually holding in there quite nicely, but similarly, I would want to see a pullback to the low 30s, to that between 31 and 30, for me to get interested in Wells Fargo. This is not that, so I can't get too excited about this. JP Morgan really probably looks the best, but I would like to see more downside. If we could get to 40, I'd probably be more interested in buying. Goldman Sachs, no. 200-day, but no. USB, definitely the best performer, but still nothing I'm interested in. So really, that's it. Take your information from the Fed tomorrow, Wednesday, and for technology and the Qs, Apple should be the tell-all, which reports earnings tomorrow night. It'll be a big one. Everyone's watching. The last thing you want Apple to do as a shareholder is to disappoint. If you're long a lot of shares, be sure to get out of some of those. Unless if you have a really long-term time frame, like for the next 2 years, then I guess it doesn't really matter. But other than that, it's just not really worth the risk. So take care, have a good night, and I'll talk to you tomorrow.